Welcome, folks. This is the market review for gold. So today we had one setup for gold. We had this buy. We had that. So during the London Open kill zone, we had this run on liquidity, taking out these relative equal lows right there. Took them, and then we reversed. We also traded inside this inefficiency. If you head over to the 30-minute chart, as you can see, we have this inefficiency here, right here, from these candles high to these candles low. We have that inefficiency. We traded into that, respected the midpoint of the inefficiency. Then we had this. This was also to be used as an inversion fair value gap because the draw liquidity was this high, and also we had this inefficiency right here. We traded into that, so that was also a draw on liquidity. We also had the midpoint of this week. As you can see, price traded nearly to the midpoint of that week. So we had, as you can see, we take our fib. So we nearly traded into the midpoint. So as we always say, we always treat weeks the same way we treat inefficiencies. So the midpoint is the level that price is likely to reprice to, and then reverse, or maybe even do anything else. So so today we had this run on liquidity. We had these equal lows and the inefficiency. We also had this inversion fair value gap right here. So you can also use that, extend it through, and you'll find that price will respect either the midpoint or the upper half of this inefficiency. So we had that. We at 2, exactly at 2, we had that run to the downside, taking out those lows and trading inside that imbalance. Then we had this reversal. So if we head over to the 1-minute chart, and we see how you could have framed those entries. So the element of time is always the number one factor, and it is so important because as you can see here, traders who don't follow the rules that are set in place. Here we had this high got taken out. We had an imbalance, and we traded into the imbalance right here. So if you could have gone long into that and place your stop maybe below this low or below this swing low, you could have been taken out. So you have to wait for time for you to get the right time. So here we had here it was even before we took out that low. So this made this a breaker, a bullish breaker. So we had low, high, lower, low. So while we were down here and we had the info that this was a breaker, so it was so simple for us to frame some entries from below here, anticipating for a run above these highs and eventually above these relative equal highs. So we had quite a clean setup today. So we had two entry levels that were here. So we had this swing high. We also had an inversion fair value gap right here, as you can see. Let me zoom in a little bit. Here we had an inversion fair value gap. We traded to the upside, moved past it, and then we came down. So that would have been your entry, and your stop be placed right here. But if you are not comfortable enough for you to go long inside this inversion fair value gap, then you could have waited for this swing high to get violated. It was taken out right there. We also had an inefficiency right here. We had, it is quite small, but there was an inefficiency right here from this candle's high to this candle's low. Extend that through. We had that, and we hit that as an entry, placing our stop just below this volume imbalance. So could place your stop just below that, and then you anticipate for the run higher. So the reason why I'm saying time here is the number one factor. So here we had, as you can see here, this candle was at around 159. So it was 1 minute to 2. So, but this candle was the one that came to this inefficiency and also traded inside this inversion fair value gap. So time was the factor today. So we had that. So if at all you have to go long, this would have been your entry. It is always a good practice to maybe place your stop right below those the midpoint of the gap, but you could have placed that just below that swing low. So we had that, and our aim could be aiming for these highs right here. So we had that. That was the drawn liquidity. So that was a total of 12.52 R. So and if you held price for some time, it could have given you a very crazy risk to reward. So we had this right there. So that's a total of 31.6 R. So as you can see, the element of time here is the one that makes us so precise, and also getting into a trade without the fear of getting stopped out, because we already know what is happening. We already took out the sell side, and here we took these the sell side that was residing below this low. So we took that. So there was no need for price wanting to come back to these levels. So we had that, and that was the trade. Yes, maybe you could have gone short with this. After this swing low was taken out right there, we had this inefficiency. We traded into that. We had 2 consecutive candles, which is an order block, and we also had this inversion fair value gap right there. So you could have gone short right there, placing your stop just above the order block, and then you anticipate maybe for a run, maybe below these lows. Just measure from this high to this low, the midpoint of that. Put your target right there, and as you can see, that was nailed right there. So what I'm saying is, for you to frame an entry, especially during the silver bullet window of time, you have to be patient, because for those who went long inside here and placed their stops just below these lows, got taken out right there. But for you, if you had the hindsight of whatever was happening, because we were to trade to the midpoint of these inefficiency, because the midpoint is one level that is so important to the algorithm. So we traded into that, and at that time is when to the window of between 2 to 3 was. So that was it. It was a good risk to reward. As you can see, we had quite a good risk to reward there. So it was so simple. So yeah, so that was it. And I don't think I have anything else to add to that. Maybe until I see you next time. Be safe.